regard to individuals and AOPs. The change is that the threshold for paying advance tax for the individuals and AOPs for both is now 500,000 instead of 200,000 previously. This is a change which has been done. Secondly, the company will continue to pay advance tax with reference to the turnover, but this has been extended now to apply to the AOPs as well, meaning the partnership firms. The partnership firms will base their advance tax liability on the basis of computation with reference to their turnover. As you know, this has been in vogue for the last quite a few years now for the corporate sector, and I don't have to go into the details. This has been extended now to the partnership firms as well, and the quarterly dates have been slightly rationalized, and now they'll be paying this on the 25th of the following quarter, except June, because the June quarter will be paid on the 15th of June. This is a change which has been brought in. Then let me just take, because there are quite a few amendments, I'm just trying to pick and choose. Minimum tax. This, as somebody said, this Mashhur Zamana minimum tax has been there, as you know, since almost 1992 in the form of the old Section 80C. It started off, and at the present moment also, it is applicable to resident companies only. The amendment now sought to be made is extended to the individuals and AOPs as well. Now, if your tax liability computed with reference to whatever basis of taxation you have, if that is less than, the rate has been raised from 0.5% to 1%. This is a major change. The rate of minimum tax for all classes, companies, AOPs, and individuals. Companies have been paying at 0.5%, henceforth they shall be paying at 1%. Individuals and AOPs will also be paying at 1%. This major change is applicable to all the three classes of SSCs. And as you know, that some time back, probably in 2008 probably, there was a provision brought in which favorably continues, and that is that if you cannot absorb the minimum tax, meaning if you cannot make the full utilization of this minimum tax because you have paid the excess tax, then that minimum tax benefit will be made available to you in the next 3 years, if I am not mistaken. That provision remains intact. I am not too sure whether this carryover thing is applicable to individuals and AOPs as well. I don't know whether it is there or not. But for companies, certainly it is there. And that has remained unchanged. The banking transactions. Now, very surprisingly, those of you who were present in this hall or wherever we had gathered last time and the year before, I had expressed my view that as far as cash withdrawals are concerned, the advance tax which the banks are supposed to take at that time 0.1%, which was raised to 0.3%, I could not bring myself and be inclined to accepting that on conceptual premises. And it was told then that it is not a revenue mobilization measure, it is more of a documentation of economy measure. How far they have succeeded in that, I don't know. They must certainly have gathered a reasonable amount of tax under this particular head. But whether the documentation of economy has improved or has given them a lever to go after those who are indulged in cash transactions in a huge way, I am not too sure. But as if that was not enough, this year the amendment has been made, to say the least. It has been done not in a very professional manner. And I am putting it very mildly out of deference for the Federal Board of Revenue. It says all modes of banking transactions, including TT, online transfer, blah, 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 blah. And for the last 2-3 days, you have been hearing whispers that it won't apply to cross-checks. और हम clarification जारी कर देंगे. May I ask Federal Board of Revenue, is your clarification more powerful than the legislative intent of the finance bill? Would that overcome that? What if our independent judiciary, if someone were to go and say, this circular is ultra vires the law, what will then happen? Why can't we keep our amendment finely tuned and discreetly done to just tax what we are intending to do? If our intent has been that people indulge in cash transactions and cash withdrawals through these instruments of banking, the construction of the particular amendment should be saying so. But the manner in which it is set today, I do not think that any mode of banking transaction is spared. And it does not give me enough comfort, and would not give you any comfort either, that yes, check transactions will not be covered. And this too appears to be, forgive my saying, this too appears to be an afterthought when the powers that be were confronted with this particular provision, that why should check be subjected to this? Check, after all, is a documented transaction. Because even by trying to go for the avowed objective of documentation, the documentation is not going to improve in any appreciable way, I can assure you. Because going for the documentation and improving documentation requires much of an effort. And unfortunately in this country, we have been following Adam Smith's principles of convenience, not for the taxpayer, but for the tax collector. That if they are able to collect it, chatkara lag gaya, withholding tax ka. And I keep saying time and again every year, that in times immemorial when this withholding tax was brought on the statute book, if you go into the history of this law, there were only 2-3 items which are subjected to withholding tax. I do admit, and let me make no bones about it, and I hold no brief for the dishonest people in this country, that yes, there is a plethora of malpractices going on. There is abundant concealment and evasion. But there are ways to tackle that. If you start tomorrow, as I have been saying this morning, if you start putting a withholding tax, that every person who puts a tie will pay a withholding tax, and if you want to improve documentation, is that the way to improve documentation? Is that the only way? So I personally feel very uncomfortable that not much reflection has gone into this provision. There have been overzealous in this, and the draftsman probably has not been given proper briefing by the FBR as to what is the intent of the revenue to bring in this amendment. After all, the draftsman will do whatever you tell him to do. And if you fail to convey your legislative intent to him, it is just like if you tell the architect something, he will make. If you don't tell him, he will not be able to fulfill your user requirements. Same is the case with drafting. And time and again over the years we have seen that the drafting standard has been going awfully poor. It has been sliding like anything. Look at the drafting of the yesteryears. Look at the type of clarificatory circulars that have been coming from the Board of Revenue in the past. There is a persistent decline of standard. And yet, we claim tall orders, and we say that we have done a lot. Yes, a lot has been done. I do admit. I don't want to brush everything aside in saying this. But the legal intent, the legislative intent ranks supreme. If a clarificatory circular is issued, yes, fine. Normally we are asked, who will challenge that? If the taxman is not going to challenge it, why do you worry? But that's not the way we do tax legislation in this country. We should not be doing that. It's a very, very poor way, very, very uncouth way of bringing in a fiscal provision. That you bring law, something else. Very interestingly, one of my partners pointed out, and rightly, that the finance bill talks of something, and the accompanying notes on the clauses talks of a different thing. So much for the consistency between the two. I do admit and realize, I have seen in my humble life this process of this formulation of finance bill. They are hard press of time most of the time. Last minute changes are brought in, and they don't have the necessary time to fill in the gap properly. So these things do happen. But then instead of correcting it in the proper manner, through the legislative process, one should not